Good morning, good afternoon, and good evening. As part of this virtual world that we now live in, you really don't know how to greet people and what time of day it is, wherever they're watching. But in any case, I think as far as the Gulf Capital SME Insight Summit, I'd like to welcome you all back after what should be the lunch break and what should be now the dessert, which is served by us on this panel. For the next 45 minutes or so, we'll be talking about how to get your company investment ready. And as a wise person first said, the first person you go to for money are the 3 Fs, which are your friends, family, and then the fools. But once you've gone past the fools, you need to know where else to get your money from. And hopefully today's 4 panelists can give us a little more insight. And I'd like to introduce the 4 panelists, so if they can have their cameras on now. As they start, I will introduce myself. My name is Ashish Punjabi. I'm the Chief Operating Officer of the Jackies Group of Companies based here in the UAE. And also today here as a board member of TIE, the Indus Entrepreneur Network. TIE was born in the Silicon Valley in 1992 and now operates in more than 60 countries around the world, with 60 chapters around the world in 16 countries. It's a non-profit organization devoted to fostering entrepreneurship. And we do work in various areas where we do provide foundation programs in mentoring, networking, education, funding, and incubation. TIE Dubai has been part of the Dubai Internet City now for more than 15 years and is based out of In5. And we do a regular round of events that keep happening over here. The next panelist I will be introducing is Hazem Abu Khalaf. Hazem is the Managing Director of Gulf Capital. Hazem has had over 14 years of experience in private equity with a particular focus on healthcare and education. He's been responsible for a number of investments across the emerging markets, including the acquisition and subsequent sale of Middlesex University in Dubai and an investment into Laureate Education Incorporated, which later went public on NASDAQ. More recently, he's led Gulf Capital's largest private equity deal to date, an acquisition of a 100% stake in IVI RMA Middle East, one of the largest providers of IVF fertility treatment services in the GCC. Mr. Abu Khalaf holds a Bachelor of Science degree in Business Administration cum laude from the American University of Sharjah and is also a chartered financial analyst. The next panelist is Donna Benton, who probably needs no introduction, but is best known for starting off the Entertainer app many years ago. Donna is an example of female empowerment. She's one of the most inspiring and successful leaders of our time, who constantly challenges misconceptions and defines stereotypes. Donna was born in Melbourne, Australia, where she spent most of her formative years and has been in Dubai since the year 2000. Not even a year later, she identified a market for providing consumers with dining incentives and thus started the Entertainer with a buy one, get one free offers. She's since exited the Entertainer last week and is now also started off the Benton Group, which has ventured into a number of other businesses, including the latest addition into Group Kaha Kepo, a brand that creates swimwear, resortwear, and accessories for women, men, and children. Thank you, Donna.
Thank you.
The next person on the panel is Julian Pluzeau. Julian is an investment manager in charge of deal flow at DTech Ventures, the VC arm of Dubai Silicon Oasis. He spent 8 years building and advising tech startups in the UAE and Europe and has started his career as an investment banker for Societe Generale CIB. DTech, for those of you who don't know, is an integrated entrepreneurial ecosystem that has co-working spaces, company formation services, and organizes events, and also has the venture arm, which Julian is a part of. And last but not least is Majid Al-Suwaidi. Majid is the Managing Director of Dubai Media City, Dubai Studio City, Dubai Production City, and also, on top of all of that, the head of In5, which is all of these are part of the TCOM group. He provides strategic direction and ensures growth in the media business communities, home to thousands of media companies and tens of thousands of creative professionals. As the Managing Director of this integrated creative ecosystem, which is home to many Fortune 500 companies around the world, Majid plays a key role in positioning Dubai as an international media hub. Prior to this, Majid was also the Managing Director of Dubai Internet City and Dubai Outsource City. In his previous role as business development, as head director of business development for Dubai Internet City and Dubai Outsource City, he was also part of the team that launched In5, a dedicated platform for emerging talent that supports innovation and entrepreneurship across TCOM's business parks. Thank you for joining us, Majid. So we will start the discussion now, and the idea is to have the audience as well engage with us with your questions. There is a chat window on the stage section, and if you do have any questions, please do keep them coming in, and we will try and get to them, as many of them as we can over the course of the next 40 minutes or so. So Hazim, we talk about the 3Fs, friends, families, and fools, and then after that they come to people like you for investment. And what advice would you give to a founder that is preparing a business plan for the first time? And what are the common things that you see that really shouldn't be in there that you wish they would do better the first time round?
Well, thank you, Ashish, for the intros, and it's a pleasure speaking with you now. So basically, we do, as part of my job, obviously, I come across a lot of business plans, and you see some recurring themes that I think if expressed would really help the entrepreneur or the business owner come across in a better way to potential investors. I think in the early stages of business plan, generally you find a lot of reluctance of them sharing their this idea or their business plan to a wider group because of concerns of somebody picking up the idea or basically competition from people. The reality is the magic sauce, so to say, is execution. You see a lot of good ideas where not executed on are basically. So, and if you do not share your idea, you really end up thinking isolated in your thinking, where you're not challenged by people that have different points of views, which makes the plan sometimes either unfinished or kind of monochronic, if you so say. So you have to add more color and add more ideas from people. The other point that I would usually see that is preferable to avoid is basically you see a lot of entrepreneurs in their business plan build an impressive business that goes and branches off to many different subs. While it's always great to dream and have ambitions, and we definitely want that, but it's at the initial stages, it's really much more important to focus on one single problem or one single initiative, whether it's your core offering, and basically you take it from there and so the ideas of expanding into sideline products, etc., is not the initially. It's okay to mention them, but you need to focus on your core offering.
Okay.
The last point. Am I cutting off?
Yeah. The audio is cutting back, so maybe we'll come back to you with the next question, and you can just refresh the sound somehow.
Okay.
Julian, I remember when we had a prior conversation, you said you started off as an entrepreneur and you now moved to being a VC. What's the biggest insight you gained when you changed roles from being an entrepreneur to now being a VC?
I think there are a few aspects that are quite interesting when you switch side of the table. At the end of the day, we still work in the same ecosystem. So let's say there's some part of the job that are pretty similar, because as a VC, we need to study your business model the way you understand it. And I would say the biggest insight I got into moving to work as a venture as a VC was the time actually it takes for you as an entrepreneur to raise, especially your first round. We work with early stage startups, so let's say seed to Series A, and most of the time we see founders going through their first fundraise in their experience, and it takes time. It doesn't take time because we want to make it this way. It takes time because we need to build some confidence, and it's extremely important for us as venture capitalists, investors in general, to get some trust about you, your team, and your business model. That would be the first aspect. The second aspect is this is not a sales exercise. When you pitch for funding, you're not selling your startup. It's an open discussion, and we want to maintain an open discussion because this is again how we build trust and how we see how transparent you are throughout the process. So that would be the two main aspects. The third insight, I would say, is sometimes we need to say no, not because we don't trust your venture or don't appreciate your venture. It might be the case that it's based on our portfolio strategy, and as you know, VCs like to have synergies between their portfolio companies and the founders they work with. Sometimes we can't see that in a project, even though the project has everything, all the positive aspect to get funded, but for us, it's not get a no. So in that case, it's never easy for an entrepreneur to get a negative feedback, but we try to be as supportive as possible, and we explain the reason why we can't invest in this specific case.
Thank you. Donna, so you started off the entertainer, and you started off at a time when there was probably a big open space in the market, and you were able to probably attract investment at that stage as well. But then you saw a change as far as the competitive landscape, probably at a couple of years down the line, when we suddenly had every coupon site in town, the Groupons, the Golden Rabbits, Living Social, etc. And they were literally out there to grab your 2-for-1 lunch. How did you manage to continue growing and getting investment at that particular period of time? Because I think that's one of the bigger challenges, especially now, that a lot of entrepreneurs are facing when the unexpected happens.
Yeah, hi Ashish. I think there's always going to be competitors in the market, and to sustain a business, firstly, you have to look at what your competitor's doing, but you can't obsess about what your competitor's doing. So you have to really stick to your model and what you know, and stick to the business plan. So when a lot of the daily deal sites came on board, Entertainer was roughly 7 years in then. So I'd already built a really strong relationship with all my merchants. And look, to be honest, everyone was coming to me saying, what about the daily deal sites, Groupon, etc. But what they didn't realize, it was a totally different model than what we had. You know, we were 2-for-1, we were annual. It was completely different. It was non-commissionable. So basically, 1, I didn't panic. 2, I stuck to our model. 3, I looked at what our competitors were doing, but I didn't obsess about it. 4, I'd been, I think, smart enough to have enough cash flow, so I didn't need any investment. So for me, pretty much nothing changed. I was just really focusing. I was just really focusing on what we were doing, and moving along as planned. And if anything, it was awareness in the market that there were some great deals around, and you know, they were monthly, we were annual. There was always 2-for-1. We were uniformed. So what I would say to sustain a business is, 1, you have to believe in what you do, and you have to believe in your product. Don't panic, don't get scared. Stick to the business model. You do have to be a little bit agile as well, in case you need to diverse from that slightly. But keep your eyes on the ball, keep on what you're doing, because a lot of people get a little freaked out that they're, you know, I not only did I have the daily deal sites, I also had Golf News at one point as well. They did a book. So it's all about also how you deal with your customers, your merchants, and that's a really big thing. And you have to produce results. It's just not that. You have to have a 360 solution, and you have to be confident, and you just have to go out there in the market. But one thing I would say, to sustain the business, cash flow is key. You have to have enough cash flow in case something happens. Don't overcapitalize, and really just stick to your business plan.
Great, thank you. Majid, now switching to you. Technology is at the heart of every business these days. So every business is sort of a tech business, and I think we often lose sight of that. But sitting on the side of the fence, where you need to evaluate the operational needs of businesses and look at the efficiencies for different industries with incubation centers like In5, how do you manage that and make sure that A, you're current, and B, that the businesses understand exactly what needs to be in there, and they just don't talk about the technology, but actually talk about the business?
Well, first of all, thank you for having me on the panel. And second, I think a lot of what we've learned today over the years of setting up this specified or specific industry-focused zones taught us a lot with regards to the companies that we will deal with. And we have a very strong communication with companies that are on the ground to get to know what else can we provide to different businesses, especially within the logistical part of the business environment that we're talking about. So today, a lot of these companies that come to us and have certain requirements on the ground that they require, we try to facilitate these requirements by providing these services, either at a very low cost or subsidized, or upgrade the infrastructure, the legislative infrastructure that goes with it. So there are a lot of these activities that we try to bridge between different businesses and the different times where these businesses are. So for instance, the M5 model there was a similar M5 model in the 2000 period when we first started, but that was too early for a non-mature market at that point of time. So the introduction of that and then a reintroduction in 2013 has made a very big difference, because we've listened to the market and we've seen the direction that the market is taking, and we wanted to be part of that relevancy of that time and age. So as you rightly mentioned also, that we deal in silos and so many different businesses, and we see a lot of different categories of businesses that require different set of challenges, that have different set of challenges. So in the tech, we've seen the problem with the initial idea with the problem in the tech, and how this would be helped by creating an M5 tech and providing the investment and investors and entrepreneurs with the platform. And then we applied the same idea, the same concept on media, and we are applying the same concept on design, and try to find the relevancy and upgrade and basically change the offering as we move forward, until we actually reach to the optimized offering that definitely has a positive and not only positive, practical impact on companies. And so what you actually use more than what you theoretically could be using in the future.
I agree with you, and I think given where TCOM started with Dubai Internet City and Dubai Media City back in 2001, when the internet and media weren't necessarily seen as complementary or even businesses that go along together, we saw the vision when the two were put together, and definitely all of that development that's come after that. Julian, coming to you, when you identify potential competition for someone that's pitching to you and they don't quite see it, how do you go around trying to open their eyes to it? Because I think one of the problems a lot of entrepreneurs is they've got their blinders on, and they say, this is it, and this is our USP, and we're truly unique, and they probably aren't. How do you work around that with them?
Sure. So first of all, there are many pitfalls when you prepare a pitch deck and then present it to potential investors. One of the main pitfalls and problems that we tend to see in those presentations is underestimating your competition, or overestimating your product, as you say, and being certain that you're 100% unique. For us, the way we see the market in general for any given startup is, if any product can solve a similar problem that you've identified, then those technically are competition to you. So what we want to see is you being transparent, understanding that even though you're innovating, even though you're addressing a certain pain point different way than other people have done it already, those are still your competitors. And it's very important, because there's one mistake that we see again and again, is once you launch, you expect people to come to you, customers to come to you, because again, you're different from the others, you bring something more, you're cheaper than your competitors. It doesn't necessarily work this way, it hardly works this way. And again, we want you as founders to be understanding, have a very strong and deep knowledge of your market. And if you see the typical slide that in every presentation is in the upper right corner, you have all your competitors, the full map, and then you're always in the upper right corner, and that's it. The best slide I've seen regarding the competition, actually was 2 weeks ago, a startup that put in this slide all the failed competitors, the past competitors who attempted to solve this pain point and who failed. This slide only gave this entrepreneur a call for us to have a meeting and discuss further, because there was a proper understanding of this market and the competition.
Majid, same question to you, because you probably see that where everyone says they are the Uber of their industry. How do you help identify who the competition is? Because the competition isn't always as apparent as it looks.
Well, Ashish, I think there are many different ways of doing it, but I think the ideal way that we've chosen to use is we use the industry itself to start assessing what is good and what is worth exploring. At the end of the day, we didn't want to depend a lot on our own experiences in this, but we wanted to depend on the industry itself. So most of our steering committees today that decide on how good the company is or how is it worth getting all of these benefits are the people from the industry themselves. So our steering committees are always being built around the entrepreneurs themselves. They are about people within the industry. They are experts in the field. They are people within multinationals that could be potential buyers of these businesses in the future. So we depend a lot on the understanding of these panels. A lot of a lot of these things would go forward later, and definitely we have an input in seeing what this company is doing and comparing it to what is available within our zones. But generally speaking, I think the unanimous vote plays a bigger role in choosing these companies.
Donna, I'm going to ask you a question. So, okay, we talk about opportunity, we talk about all of that. I think one of the things that a lot of your businesses have been unique about has been the culture. And the culture is sort of the intangible that you struggle to put a value on. How do you pitch the culture as one of the USPs to investors?
Yeah, listen, I think, well, firstly, the best way to pitch culture to an investor is get the investor into your office to start off with and don't go to theirs. Because once an investor is in there, they'll be able to see the energy, what your company's like, and then they feed off that. Secondly, I'm very big on company culture. For the people who know me and people who have worked for me, you can't instill company culture. It has to lead from the top. You have to lead by example. It's back to the foundations. Don't ask anyone to do anything you wouldn't do. You've got to work the hours yourself. You have to get respect. You earn respect. You don't actually get respect. So basically you can't instill company culture. But as a leader, firstly, you have to love what you do. So I would hope that anyone doing what they're doing loves it, and that should feed off it. But again, your staff are your investment at the same time. So, make it a fun environment for them to come to work for. Think outside the box, look after them. I always say a good company comes with energy. When you have energy, then you get results. Results come with rewards to the staff. And when you get results and rewards, then you get the investor. So you can be, I think I'm fair, I'm firm, but you have to have a bit of fun as well. And if an investor walks in, they can see you're profitable. They can see the growth. They can see it's a great team. They're there for the longevity of it. Well, I think that's pretty good for an investor.
Hazem, how would you take that on? I mean, where does culture play a part when you're evaluating and when you're looking at, even in your area, healthcare and education? Is culture something that is a consideration?
Well, first of all, apologies about the technical issues. Please do tell me if my voice is cutting off again. Culture, as Donna mentioned, it's the engine of growth in any business, right? Everything goes down to the culture. It's the gearbox that makes everything click around, right? So everything clicks because of culture. Very, very important. And you'll find in my experience, I've done a couple of investments where mistakes, I would brand it that way, where you overlook the culture because the surface look positive, the numbers are ticking, but what you'll find is that if there is no cultural alignment, if the culture is not right, things kind of very quickly have the propensity to throw off tracks, and you end up with a bigger problem. Like Donna said, You can fix operational problems. You can fix financial returns. You cannot fix culture. Or it's much more difficult to do that, actually.
Interesting. Julian, coming to you now. We're obviously going through a difficult period of uncertainty with COVID that's come in at this stage. And you've probably seen a lot of pitches that have come into you during COVID, pre-COVID, and post-COVID. Is there something that you've received now that you said, pre-COVID, I would have probably invested in that business, but post-COVID, probably not? And what do you think businesses have to do in their plans now when they present to you to reflect the current scenario?
I think it really depends on the vertical that the startup is operating in, because of course there are some new verticals that kind of open, especially everything which is linked to e-commerce, online classes, edutech, health tech. Those are kind of the very hot topic in those days, but they were already hot before. So I would say COVID is just accelerating a transition that we've seen and witnessed over the past couple of years. And of course, we had like 3 or 4 months that were a bit more complicated to see the future at 6 months, 1 year, and see how the market can go. But I would say everything we've seen over the past 2 years are just accelerated, but there is nothing technically new that we were not expecting at the end of last year. In the presentation, we tend to see in those days what we ask now, but that's what we ask also to all our startups in our portfolio, and that we advise startups that are based in DTech and we talk to on a daily basis, is cash management. As Donna was saying earlier, it's extremely important to see that you have a way to preserve your cash, to limit your spending, and extend your runway. And now what we tend to see is a startup that develop in their business plan and pitch us with a path to profitability. Now this is a plan B that we have. Plan A is grow fast, of course, and scale as fast as you can. We tend to appreciate a bit more a sustainable business model with a path to profitability as a fallback plan in case things go wrong again. You have like a 3, 4 months, 6 months lockdown, and you can't have any revenue or limited revenue. Do you have a certain path to profit within 12 months and a recovery plan? That's what we ask. That's what we see. Other than that, I would say we tend to see, of course, let's say lower valuation in those days. That's I think we're coming back to a new normal where we want to see a more sustainable path, and that actually is reflected more and more in the valuation, with less expectation in terms of growth rate for the next 2 or 3 years.
Interesting. So if there was something that you maybe would have rejected pre-COVID that now you go back and you say, I should have made that investment, how would you talk to a potential company that was rejected at that stage? How should they reapproach you this time around? Julian or Hazem, any of you can sort of answer this.
Okay.
Hazem, if you want to go ahead.
Yeah.
So, Julian, you want to take that first?
Yeah, if you're on our side, it's quite simple. Usually startup that we really appreciate, but we know it's just not the right time for us. We keep them on our radar and get back in touch after 3 months or 4 months. Usually every 3 or 4 months we do an update call, or we ask them if they want to come to our office, or we come to their office, as I was saying earlier, so we can see a bit more the activity and the culture. So it's never like a definite no on startup that we rejected. Is more an open discussion. It takes time, and for us, there might be a moment that we want to push now because we understand it makes sense. There's more momentum. We are more confident in your figures, in the way you understand your customers. And in that case, we're ready to pull the trigger.
So basically, no means not for now, or no for now.
Yeah, exactly. There's never a definite no. We have some good entrepreneurs in this region. Sometimes it might just not be for us because that's not a vertical we're looking into. Second, it could be a portfolio management strategy because, again, we look for synergies between founders. We look for synergies between our portfolio companies. That might not be the case at the moment. That might be the case in the future. And in that case, we're happy to revisit our decision and discuss the next round.
I think, Ashish, on our side, we've actually seen some businesses where, the way the management has reacted to this crisis and managing their business in time like the pandemic and the lockdown, managing their costs, it was actually a very bright sign for us to kind of reconsider, because when things are both path, it's interesting because you see a lot of people that manage well, but also managing downside is very important. And a lot of companies, the thesis gets tested actually, because a lot of businesses tell you that our business model is recession resilient, or it's non-discretionary spending, where even in tough times we will still be able to get our customers and revenues in line. And actually, the last few months have been the perfect example for that. So so if companies got through the last few months in relatively good manner, it was even better for the future.
Great. Majid, you've probably seen some businesses that are in the free zones that you operate, or within In5, that have actually rebounded quite strongly.
I think we lost Ashish.
Hello? Do you have me? Okay. Majid, so a quick question. You've probably seen businesses within the free zones or within In5 that have rebounded fairly well in the COVID scenario, and are now looking at growth and fairly aggressive growth. How do you look at working with them
in the meantime,
at this stage?
I can give a bit of tips if you want on typical errors that we see in pitch deck, and then when Ashish comes back, then we can restart the discussion. So
we can hear Ashish. He's on.
You can?
Okay. He's on. Okay, perfect. Good.
Yeah.
Good.
Okay, yeah. So I'll repeat again. So you've probably seen businesses. Yeah, you've probably seen businesses that have rebounded fairly strongly at this stage. And in this scenario, how do you keep them from, I would say, getting overexcited when cash is still king?
Well, I think there are today what we've seen. There are so many different kinds of businesses that went through the last 4 months in many different ways. Some of the businesses were hit very badly, and they had to whether they had to pivot, they had to change, they had to do drastic changes to their workforce. There was this kind, and there is the other kind that benefited a lot, and they've actually gone into a growth spree, on the contrary to trying to fulfill all of the opportunities that are coming to them while they are at it. One of the providers of service at that point of time. So there is, all of these people are there. And within M5, I think you've seen also quite a number of examples where businesses have shown potential for growth in this current period. They've actually worked harder on trying to, solidify their business model, try to build more onto their business model. There were people that actually went through the investments, got more investments through this crisis than they would have got after the crisis. So there were so many different examples that were put on track during the last period that showed resilience within companies is all dependent on the decision makers of the company taking quick and fast decisions to maintain the business while it's there, and take the opportunities if they arise. So, and we were expecting a lot of businesses to close, and on the contrary, we had a very minimal number of companies that have actually folded, but a lot of them were able to withstand the storm and are still here. Yes, they aren't as profitable as they were before the situation that happened, but at least I think Today, the benchmark is as long as you have a business that is operational and is not in loss, you're doing a great job.
Donna, expansion and growing a business was always difficult pre-COVID. And you could travel around and you could venture and grow into new markets. And now with the restrictions on travel that are there, how does someone plan for growth?
Yeah, that's a good one, Ashish, because you could talk about this all day, really. Firstly, agreed with what Manjid was saying. If any business can survive this year, they're doing a really good job. So my advice to people during that COVID time was also a great time to plan and to get things in action, what you want to do for the future. I think you should also be visionary, but do it wisely. And you should take the opportunity while you can, but don't overcapitalize also at the same time. So what we're doing now is potentially the new travel. But if you want to launch into another country, there's so many different ways to do it. You know, the thing is, it's what sort of business are you in? You know, it's how long is a piece of string? Is it an e-com business? If it's e-com, well, yes, you can expand very quickly into other markets. You need to look at the multi-currency. Do you need trade licenses in other countries if you want that? So there's actually a lot of detail you need to do. The legalities also. So look, pre-COVID, yes, when Entertainer were in 15 countries, that was more about legalities, setting up satellite offices, and communication is huge if you've got satellite offices. But in this day and age, I think you can do a lot through video calling. And look, I'm a big believer of you must be online with something that you're doing. You know, they always say one of the best businesses are when you make money when you're sleeping. So e-com is quite critical in this day and age. Even, you know, I've just launched my new swimwear called the Kaha Kapo, and, you know, that's taken 10 months to set up, to get right. And in the first week, we've had 40,000 people to our site, for example, 22 countries and buying from 12. So that's a perfect example of going global, however you want to call it, but we still have one trade license in Dubai. So there are ways about it. You just have to research it, be smart. And to me, you know, e-com is key.
Okay, so if we stick to that as a case study, how did you go about identifying the market and the competition?
Oh, I need a flip chart for that. There's a lot that goes on. But, you know, I have to say, sometimes you can do too much feasibility as well. If you're an entrepreneur, sometimes you just have to do it. You've got to make things happen, watch things happen. Otherwise, you're going to be the person that thinks, oh, what happened? And somebody's already done it. So again, you have to have passion in what you're doing. Yes, you have to analyze the market. So, you know, swimwear, I'll be the case study. You know, you have to look around what there is. You have to look at different body types, materials, what's in the market. Certainly your bread and butter is the market that you're in. So what's going on? You know, for us, Sea Folly went into liquidation. They're a huge competitor. We're also manufacturing out of the same factory. So you have to take opportunity where it arises. And you also have to be smart with your digital marketing. One of the biggest things that I can't emphasize enough is when you start a business, actually two things. When you start a business, don't employ people that have got your strengths. Even though they might be fun to be with around the office, you've got those strengths. So you have to employ the people that don't have those strengths that you can rely on. And two, this might sound harsh, but if you pay peanuts, you're going to get monkeys. You've got to get a good team, and that's also how you grow.
Great. Hazim, is there still money to invest?
Well, always, always. I think there's always smart money that's there to, you know, support smart ventures and smart businesses. I think, you know, just to use us here at the Gulf Capital as an example, we've been probably had the busiest 6 months we've had, you know, for a while, because there's a lot of opportunity. This is the time where you can actually, as an investor, act on conviction. You know, like Julian said, basically some of these trends we've seen already. We've got some of these trends accelerated. So you double down on your convictions. You see which businesses are reacting well, and even in the midst of the situation, we were very active looking at businesses we hope to kind of announce a couple of deals closing in the next quarter or so. So we've been busy working on things. And again, if you react, I think Kareem mentioned earlier in the morning, in every crisis there is a winner, and there's an opportunity out of everything. So I think this environment, as challenging as it is, will create an interesting an interesting room for business investors to come together and create a bigger business that adds value to the investors, the shareholders, and stakeholders in society.
Great, thank you. Majid, what would be your advice for someone who's sort of lost at this stage, and in terms of if they had to look for support, if they had to look for mentorship, how do they go around identifying what sort of mentorship or support they should be looking for, and how do they find it?
Well, today I think, Dubai and UAE in general, there is no shortage of advice happening across many different channels and many different platforms that we have here. Whether it's the platforms that we know, so like an N5 or a DTech or any other, or the many different webinars that are happening. So this is step one of understanding and trying to build a little bit more awareness of what is happening around you. Number two, I think later on going into the actual deep dive and taking the opportunity. If I'm on the sidelines and I'm hoping that things will become very clear and this would be the reason why I move into business, then you will be standing on the sidelines for a very long time. So in some businesses or in some ideas, it's a matter of you jumping and then figuring it out, because the ecosystem itself today is very conducive to help. So you'll find mentors. So if you enter into an M5 location, you will find people that are willing to sit down and take a few minutes out of their time to give you an advice that might be the trigger for your next business. Be out there. I think out there is a very important thing. Be part of these workshops that are happening, because it's not about the workshop itself, it's about the contacts that you will be gaining out of these gatherings, whether they are e-gatherings at the current stage or whether they are physical gatherings happening on the different locations. Also, it's very important that you are open at what complementary businesses that are there. So if you are within fashion and you find a tech workshop, I think this could be something very important for you to enter into and try to tap into that world, because there will be a definite linkage between fashion and tech at one point of time within your business. Or whether you are a developer of a CRM system, and then you find a fashion designer creating a brand, you want to be part of that workshop because it will help you getting to know the opposite side of the businesses. So one of the important things that we see across, and this is a learning that we got across our zones in general, that you find that a lot of the businesses are cross-selling. So a business in media was looking for an IT developer, they will be going to DIC, and vice versa. If an IT company wants to find a media company, most probably they will come to DMC because of the close proximity and because of the environment that is helping them to identify their support within these areas.
Thank you. Thank you so much. This is bringing us to the end of our session today. I think we've had some great takeaways that have happened. Culture is still king, and I think that's one message we can remember. There is still money available. Look at cross-collaboration opportunities, and no means not for now. There's always a time to come back and speak to us if you need money. Thank you, all of you, and it's been a pleasure. Thank you to the audience. Thank you to Gulf Capital and MEED for this opportunity. I'm now going to hand it over to Sonia Carrigan, the Senior Group Director at MEED, to say the last few words. Thank you all.